Hello, friends. The scorching sun of Latin America shines not only over its endless jungles and golden beaches, but also over global financial markets. This region is a real treasure trove of natural resources, with an economy that soars one moment and crashes the next under the weight of crises. But who would have thought that Wall Street traders would be holding their breath over statements from the Mexican president, Brazilian coffee prices, or the political maneuvers of Argentina's leader? Strifor is with you, and in today's video we'll explore how a region that is far from the most economically successful still influences global markets for oil, commodities, metals, and even cryptocurrencies. But first, make sure to subscribe to our channel and turn on notifications so you don't miss other interesting episodes. At the end of the 19th century, Mexico was an agricultural country, but the discovery of oil changed it forever. The scale of black gold extraction led to the nationalization of the industry and the creation of the state-owned company PEMEX. Today, Mexican oil remains one of the country's key levers of influence on global finance. Experts have long observed that Brent prices and the Mexican peso are correlated, an illustrative example of how oil drives currencies. But oil is not Mexico's only bet. The world's largest automakers have moved their factories here, and the U.S. market depends on Mexican industry more than many realize. For example, if there's a strike at factories in Monterrey, it can affect the stock prices of Ford and General Motors, contracts for which you can trade with Strifor under competitive conditions. And what about currencies? The Mexican peso is one of the most liquid currencies among emerging markets. Many investors use it as a risk indicator. When the world expects a crisis, the peso depreciates. When economic stability returns, it strengthens. Another key country in the region, Brazil, is known in economic circles for much more than just its footballers, favelas, and the Christ the Redeemer statue. This country is a major exporter of iron ore, soy, coffee, and sugar. Price fluctuations in these commodities affect not only the local economy but also global market prices. Let's recall 2008.
It was the worst day on Wall Street since the crash of 1987.
The global crisis hit stock markets, but Brazil remained confident. Why? China was actively purchasing iron ore and oil, allowing Brazil's economy to keep growing. Investors saw this as a signal: when China grows, Brazil thrives. But there's another side to the coin. In 2015, a drop in commodity prices led to a political and economic crisis. The real collapsed, the stock index plummeted, and many foreign investors began withdrawing their capital. This case became a lesson. Brazil is a commodities giant, but its economy remains hostage to global prices for metals and agricultural products. If there's a country in the world that plays with fire in economics, it's Argentina. In the 20th century, it ranked among the world's richest nations, but decades of inflation, defaults, and political turmoil made it a textbook example of instability. By the end of the century, hyperinflation reached 5,000% per year. People lined up at banks, desperately trying to save their savings. In 2001, the country declared the largest sovereign default in history, $132 billion. Economic troubles haunted Argentina throughout the 21st century. By 2023, inflation had reached 211%, leading to serious socio-economic consequences. In response to the crisis, December of that year saw the rise of the world's first libertarian president, Javier Milei, also known as the Chainsaw President, symbolizing his radical economic views. He launched a series of reforms aimed at stabilizing the economy through shock therapy. These included significant cuts to social programs and the bureaucratic system, simplification of the tax system, a tax amnesty, and a shift to a floating exchange rate for the peso, which resulted in its sharp devaluation. These measures led to a dramatic drop in inflation. Additionally, for the first time in 123 years, Argentina achieved a budget surplus without a default. However, such drastic steps also had negative consequences. Poverty levels hit a historic high, and the economy entered a recession. And this year, Milei found himself in a crypto scandal after promoting the cryptocurrency Libra. Investors rushed to buy the token, sending its price up 400%. But then he deleted his post, the price crashed, and thousands of investors lost money. Political opponents threatened Milei with impeachment, and an investigation is now underway, though the president denies any market manipulation. Thus, Javier Milei remains one of the most controversial figures in politics, perhaps explaining his warm relationship with Donald Trump. Share your thoughts in the comments. What do you think of Milei's reforms? By the way, this isn't the only scandal involving politicians and the crypto market. Venezuela has some of the largest oil reserves in the world, but political instability and economic sanctions have led to a significant drop in oil production and exports. In an attempt to bypass international sanctions and stabilize the economy, the Venezuelan government announced the creation of the first national cryptocurrency, Petro. The plan was for each coin to be backed by 1 barrel of oil, but something went wrong and no one believed in it. The IMF called the project a scam, and U.S. citizens were banned from purchasing Petro. Additionally, Petro was centralized and transactions were slow. Even local stores refused to accept it, despite citizens being forced to use it for taxes and airline tickets. Eventually, its price collapsed to 1/1000th of a cent, and within a few years the coin officially ceased to exist. Despite the Petro failure, cryptocurrency usage in Venezuela continues to rise. Amid hyperinflation and currency devaluation, many Venezuelans turn to digital assets as a store of value and a means of transactions. Last year, the country's crypto trading volume more than doubled, adding about $20 billion to the economy. Beyond the countries mentioned, other nations in the region also play a significant role in the global economy. Chile is the world's largest copper producer. Peru is a major exporter of silver, gold, and copper. Colombia is known for its exports of oil, coal, and coffee. The economies of these countries are closely tied to global commodity markets, and changes in global prices directly impact their financial conditions. In conclusion, Latin America is a region with rich potential and diverse economic realities, both positive and negative. Therefore, investments in the continent should not be considered a guaranteed profit, just as its high economic potential and important role in the global economy should not be underestimated. For this reason, traders and investors must closely monitor the news from Latin America. It has a significant impact on the prices of oil, precious metals, coffee, and hundreds of other assets, including cryptocurrencies. With Strifor Broker, you can apply the results of your analysis to trade commodity market contracts for difference, precious metals, forex currency pairs, cryptocurrencies, stocks, and stock indices under competitive conditions. To do so, register an account via the link in the description, analyze the news, expand your economic knowledge, and subscribe to our channel to not miss other interesting videos. See you in the upcoming episodes.